A family in a seasonal town had maintained holiday traditions for decades until a historic blizzard collapsed their roof days before Christmas. The weight of unprecedented snowfall destroyed their living room and buried generations of decorations. Neighbors helped with cleanup, assuming insurance would handle restoration. The denial letter arrived Christmas Eve, citing act of God exclusion, arguing the storm was statistically improbable, a once-in-centuries event their policy didn't cover. Celebrating in temporary housing, they learned insurance companies classify extraordinary misfortune as divine intervention beyond coverage. Their home wasn't destroyed by snow, but by a clause that considered exceptional weather events as miracles they should have anticipated, leaving them to rebuild without the protection they'd paid for over years. Moral lesson? Don't assume act of God means any natural disaster. Ask specifically what's covered before assuming you're protected against nature's extremes.